All right. Good morning, everybody. Let's see. Give me a yes or thumbs up or something in the question bar if you can hear me. Just real quick. Thanks, Jim. All right. All right, guys, welcome to the Hurley Investments Trade Findings and Adjustments of May 12th, 2022. Been kind of another wild day. We had a big bounce this morning that has all faded away. Getting close into our East Coast lunch hour. And it's just another wonderful day in the neighborhood. Just to recap, a couple weeks ago on the 5th, 4th or 5th was the last time I think I was with you. I guess that's only a week. Good counting, Keeve. That was just after the rate hike. The day of the rate hike, we had this big, huge bounce on the May 4th, and then the next day gave it all up and then some. And we had taken protection off of a few things because of this ridiculous big bounce, thinking, you know what, it looks like the market thinks that it's all priced in, and they're all excited that that Powell is not considering a 75 basis point hike. And then the next day, a bunch of other people decided that that was a stupid idea and headed back down. So that's where we're at. All of these stocks that we had unprotected got protected way up here. So right now, those are all looking really good. Glad we got protection back on. In other words, none of this even matters. So what am I looking to do right now? I am looking for placing a trade. But not a bullish one. I'm looking at QQQ puts, specifically because Qs are the NASDAQ ETFs. QQQ is the NASDAQ ETF, and it is cheaper price-wise than the SPY that follows the S&P. And the NASDAQ has frankly gotten much more hard hit than S&P as interest rates go up. Investors fear that these high-priced tech stocks are going to have most of the hurt from rising rates. So that's my my reasoning behind the QQQ puts. Saw it up at 295 earlier this morning, and wouldn't it have been smart to put them on then? But you know, if only we could predict intraday movements. So what I'm looking at doing now is waiting after the lunch hour to see if we get a pop back up a little bit. to where I could put them on a little cheaper, expecting that at the end of the day, we'll get the typical bloodbath towards the last 30 minutes that we've been seeing throughout the last few weeks. So that's where I'm at. I'll be honest, it's looking at, I've been looking at these puts for quite some time, thinking, you know, some of these little accounts that have a lot of leap call contracts and whatnot that just don't get the protection that they need. I feel like we need to find something like this to put on. And, every time I went to put them on, we have these nice bounces at support levels here and bounces and a rate hike that was a positive day in the market. And then it came back down to a support level, or at least somewhat of one, for heading down. If you've ever felt like as soon as you put a bearish position on, the market is going to turn, know that I can completely relate with you. And it's kind of funny because we get questions all the time about, all right, when do you think we've bottomed? What's your forecast? When do you think stocks are going to head back up? And the reality is, we don't know. And nobody knows. It was pretty funny to see, oh man, I can't remember if it was here before the rate hike or the day of the rate hike. I'm trying to remember, but it was one of these days, beginning of May. They had this guy on CNBC, some other money manager that has apparently predicted these other few bottoms right here, around here, throughout this year. And he predicted this was the bottom somewhere around here, that it was these first few days of May. And he had all these reasons, and it all sounded very sound. And well, now we're 30 points lower, almost 20 points, at least on the QQQ puts. Where are we? Was around 4,100. Now we're closer to 3,800. Getting awful close to that 20% down, where we're basically 20%. We are now technically in a bear market. So, all right, so given some of these frustrations, I don't know if I need to put it on now. If I put it on now, we're at the lows of the year. How do I know it's not just going to bounce here? Of course, this stuff always bounces as soon as you up and decide now is the time to put this protection on, and of course it's going to bounce tomorrow. And your head kind of goes through these things, and it's a little bit ridiculous and laughable. So my question to you guys, what do you do? What do you base your decision making on? What would you do if you were in my position? I'm going to say looking to add What do you base your decisions off of? What do you guys try to look for? I probably have made it very difficult to answer that question because I told you I can't predict the future, but I'm not asking you to predict the future. Destin says, why would you buy puts in such an oversold condition? Technically not oversold yet, Destin. Let me update. This would be oversold technically. It's close. It's been a few times where it's gotten close and gone higher. So I guess you've hit on what I've been wrestling with, Destin. Here's what I'm looking at. We're still in a bearish trend. That's the reality. We're in a bearish trend. That's number one. I'm just going to say market. Right now, that's 100% correct, and it's only not correct once it breaks that trend. And nothing it's done the last month and a half has done that. The other reason is simply that news has only gotten worse beginning of this month. And until we get something positive, Putin's withdrawing from Ukraine, oil prices keep coming down, inflation starts to settle and go down. We had, something of that nature that changes. If not, that there's really nothing for the market to look forward to. It's all pretty negative. Hence the reason it's continued down. Jim said, keep the short incremental strategy going. Market is too unstable, nothing on horizon except election will effectively change this. Yes, I definitely agree, Jim. Except one of the things that I mentioned, you just don't know what positive news will come up. And for hell's sakes, we didn't even really get great positive news for the market to up and decide to go way up on a rate hike day that should have been, bad news, but because it's what the market expected, and also Powell was taking off 75 basis point hike option, it went up. It just doesn't make sense. So, yeah, there's news reasons that could pop up that we don't know about right now that could change things and push it up. But short of that, I agree. There's really nothing until election that might change that. What was the other bad news? GDP, first negative number in a long while. So there has been more things beginning of this month that have continued to help push things down. Does that answer your question, Destin? You don't have to agree with me. And, if I put these puts on later today, and then tomorrow it pops up or we get a trend reversal, you can bet I'd be pulling them off pretty quick, because the darn things are going to cost $15 a contract. Okay. Destin says, yes, fundamentals are bad, but it'd be hard for me to buy puts based on the charts. Okay, well, good. Tell me what you see in these charts that would make you not want to buy puts. Maybe you can help me out. The market could just decide, absent any positive news, the market could just decide, it's a little too oversold, even though it's not technically oversold. These stocks are pretty cheap. You're probably seeing that with Facebook. You're probably seeing that with what else is up today. Under Armour was up big earlier, still is up 6%. Baidu is up 1%. Okay, Destin says we're at the bottom of the trend. What in this chart tells you that we're at the bottom of a trend? And sorry for me picking on you, but I think this is all good to talk through. What, and anybody can answer, what in this chart do you guys see that indicates to you that we're at the bottom of a trend? Come on, Destin, don't go silent on me now. So I guess that's kind of the question, right? Let's see. The pivot lows match, and we are far from the pivot highs. Okay, let's look at pivot points. We haven't done that on this chart. Good idea. Also usually have Williams percent R. So pivot lows match, and we are far from the pivot highs. So I'm seeing a pivot point 294-ish. And the next one down is down at 275. So I don't know if you're looking at some other pivot points or what you might be looking at, but to me, this tells me our pivot points have been broken through at the S1 level, and we've got quite a ways down to the 275 pivot point. So I think, Destin, your best argument there would probably be the fact that we have you responded 336, 320, and the current has a little more downside. Are you looking at the same chart? I'm not sure where you're seeing. Let's see, 336 is up here, 320. Not seeing a pivot point there. But I would think your best argument against puts would be three other times where when we did get fairly close to the oversold line on the RSI, we did have a nice bounce here, kind of a good bounce here. I mean, kind of, because it came back down in 2 weeks. This was really just a couple of days, right? So I'll definitely give you that. Pivot point from January and February, January 24th. Get the pen off. So there's February, January. Seeing 365. Sorry if I'm not pointing out where you're looking at, Destin. January 24 lows. Well, yeah, I guess I'm not following. I mean, we're far below those lows. We're below those pivot points here in February, the low one on February. But the past pivot points really don't matter as much as the current ones we have for the month here. I don't look back and check past pivot points of past months. There you go, hotter. I'm getting hotter, colder, colder. So I'm not going back that far. Well, this is January. This is February. All right. makes sense, he says. All right, so sorry, the lag time between talking and writing. I know it's a little tricky, but yes, for what I do, and I'm looking at the pivot points. You're really supposed to use them for the current month. You don't necessarily see them follow previous months. You don't see it on this one. I mean, technically it didn't follow it this month either, but it tried to hold that this morning. Um, the fact that it rallied up here this morning and came down, that's another kind of crappy sign to me. But again, I would say definitely those well, not yet. We can't count that yet because it hasn't bounced, but 1, 2, maybe we could count this one, 3, 4. This one was definitely oversold, but we're kind of looking at very close to oversold, 4 chances here where it kind of bounced. And, maybe we get a bounce before it heads lower, but right now everything I'm seeing news-wise is not positive. Nothing on the horizon. Doesn't mean I won't be completely wrong tomorrow if Putin up and decides to leave and Ukraine or whatever the case is, or the market just decides, okay, this is enough. This is some good prices. We can buy stuff. But otherwise, I see that we're entering a bear market, and for some of those little accounts, I just want to get something on. We normally for leap call contracts, we're just looking to dollar cost average them, and I'll look to continue to do that. But because we've got a ways for we really see anything positive, and because of the trend we're seeing right now, and because the market has been so volatile throughout this year, I just feel we also need to look at some puts. We get another rally at the end of this day, I might wait a day. But yeah, Destin, this is definitely a tough call. Let's see. Jim says wages increases are losing to inflation. No plans to correct any of the problems in place, and crises are continuing to grow, and spending is out of control. The downward pressures will continue to be driving the possibility of going lower still. I mean, yeah, all those reasons are definitely something to consider, and I definitely agree with you, Jim. It doesn't help. There was one more thing. So Putin's pulls out of Ukraine. Gas prices did come down a bit. At least for a little bit. I mean, we also just went through earnings, which a lot of companies just did not do great. So this is probably the most likely one if we're going to get excuse me, if we're going to get a bounce of that, just happens absent any news that changes anything. But again, I think that would be short-lived, and we kind of tried to do that this morning. Certainly not a great sign that it went all the way to 295 and is back down. And for all the back and forth with you, Destin, I just don't see a trend reversal here. We would need several days, a week, a couple weeks where we see stopping at this level and starting to head back up. Something like this. Where it just kind of starts to try and make a little bit of a bottom for a few days, and we get higher highs and higher lows. Don't see that yet. And really, pivot points are just estimation of where buy and sell orders might be, and therefore support and resistance levels. And they really haven't shown me, especially the nearest one here, that it's really helping anything. So that's kind of it for me today, guys. Thank you guys so much. Thank you, Destin, especially for your comments. Jim, I really like some of your points. Really appreciate the interaction today, and hopefully I'm wrong and we find the market up and decide that it needs to start heading up. I would like nothing more. Because have for heaven's sakes have some wonderful profit inputs right now. I mean, Facebook, I was looking at it this morning, since it was popping up a couple percent, looking at the possibility of taking the profits on the puts doesn't seem like a good idea right now today, but cost basis of around 1380 we bought them for it, but 205. Where's Facebook? Let me get Facebook on since I'm talking about it. This doesn't have the 15200 day, but still in a bearish trend. 5 and 20 crossovers to the negative, crossover to the negative here, starting to cross over here on the MACD. So we're still negative there, or not negative, but bearish on Facebook. But what was I saying? 1380 is what we bought those 205 puts for. Where's 205? And they're worth 2290. Probably a little more now since Facebook's came up and kind of went down a bit since then. That's just one example. We've got so many stocks that we have great protection on, and I am loving every minute of profit we have in puts that we can potentially add for more shares here, hopefully soon. But as we talked about, that trend has not occurred. Nothing has shown me that we've found a bottom yet. So, guys, thank you again for joining. That's really all I had for you. Thanks, Jim. We'll do. We're doing fine. Times like this, we just got to focus and remember on the fact that all of this gives us more shares and more profits in less time into the future. And that's really it. It's really that simple. It's not easy, but it is simple. All right, guys. Thanks so much. I'll see you with Kevin giving our webinar on Monday, of course, and I'll see you next week for trade findings. Take care. Have a good weekend.